welcome. You're watching the special show, which is focusing on all the action in the primary markets. Astha Jain, Senior Research Analyst of Hem Securities, joins in. Hi, Astha. It's been a while since we caught up, but of course, we've had a very, very busy period in terms of listings, IPOs, openings, subscriptions. It's a full house. I'll start with Western Carriers today because this opened for subscription on the 13th of September, closes on the 18th, and they're looking to raise about 492 crores. Successfully raised a significant portion from anchor investors as well. And now, just for the sake of our viewers, Western Carriers is a company, India's largest private multimodal rail-focused 4PL asset-light logistics firm. It operates on a scalable asset-light business model. Astha, have you tracked and covered this one? The company has grown quite well. They are looking to use the funds that they raise for expansion. What should investors do? Subscribe to Western Carriers?
Hi, good morning. Yes, talking about this company, it is the largest private multi-modal, as you have said, rail-focused and 4PL logistics company. So 4PL logistic company is one differentiating point about this company, and that is why they have a strong asset-light model also. Now, if I talk about their volume share also, it is good in terms of domestic as well as EXIM volume share in the terms of containers. They have a volume share of around 6% and 2% respectively. This is, I'm talking about domestic as well as EXIM. So talking about this company, we are recommending subscribe to this issue because the most important point about this issue is that the reasonable pricing. They are coming at a price to earning multiple of around 21, 22, which seems to be reasonable when I compare it to the other listed players like Mahindra Logistics, TCI Express, Container Corporation, etc. So one important point about this company is that they have done the valuation reasonable, which I feel the reason behind might be that this sector is never an investor frenzy sector, or investors don't have so much fancy about the logistics sector. As you have seen in the past also, logistics sector companies have not delivered that extraordinary high returns as compared to other sector. So the sector's fancy is not very high, and that is why my company has kept the valuations at a very lower level or a reasonable level. So we find valuations are very attractive. Apart from that, the financial performance of the company seems to be very strong when I compare to the other players. So we are recommending this IPO to be a subscribed candidate one with a limited listing gain as well as long-term gain.
Completely take your point. The sector does not demand a premium valuation, even though logistics is the cornerstone for India's growth. While the valuations are attractive, Astha, the fact remains that a couple of risks that I'd want you to talk about. It depends high dependability on the top 10 customers. Which means it doesn't have a very diversified client base, could be viewed as a negative. I know they will raise the money to pay off some of their debt, but they have a very high finance cost. So how does that sort of impact the operations of the company? And also their working capital requirement days is also fairly high. So operationally, do you feel like these are challenges of the business and par for the course? And also, most importantly, it's a fragmented industry. While you're the big daddies, you also have too many local players in the business.
Right. So now talking about these challenges, I think the working capital intensive nature is basically the nature of the industry as a whole. If I take about the industry's characteristic, then it comes for the industry also. So this is a working capital intensive. And if we go through the objects of the issue, then their objects are, yes, to pay some sort of debt, and also for CAPEX, they are planning to raise the proceeds. And that CAPEX is for purchasing of some fleets, etc. So I think, yes, that is really a concern for the company. But looking after the other financial metrics of the company, we find this issue a reasonable one, because if I talk about their CAGR growth in the top line, bottom line, operating profit, along with the strong return ratios which this company has posted, it clearly keep them apart from its peer. Because we have seen that in this industry, there are many companies which are still loss-making. So, I mean, if this company is coming in front of them with a strong, profitable track record of not only a 1 year, but last 3 years, because this is what the data are always mentioned in the RHP. So I think looking after all this also, this company seems to be a reasonable candidate for a subscription one. Yes, there are some concerns like the high debt, interest cost, but due to the repayment of certain debt, definitely their interest cost will get reduced and that will add to the profitability. Working capital intensive nature is the nature in this industry of all the businesses which are presently running in this industry. So I'm not taking it as a major concern. But I think looking after the objects of the issue as well as the current financial performance of the company, we are convinced with the IPO, and that's why we are recommending subscribe for this IPO.